Good Tuesday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance executive editor Brian Sozzi. Lots happening in markets right now, to say the very least. Of course, we still have earnings season, and that continues on. To that end, Palantir stock is getting drilled in the pre-market despite a blowout third quarter. And who said stock valuations don't matter? Suddenly they do. Uber stock also coming under pressure following a solid quarter of its own. Gross bookings popped 21% and came in slightly better than consensus forecasts. Bitcoin is the top trending ticker page on Yahoo Finance as a sharp sell-off in the leading crypto rages on. Really seen a big sell-off right there. All right, let's head over to the NASDAQ and check out Yahoo Finance's Brooke DePalma. Brooke.
Good morning, Brian. What we're seeing is all three major indices open in the red this morning to kick off today's trading session. We now have the Dow opening up with the lowest downward momentum, down still though about 0.7%. Then we have the S&P 500 just right around behind that, down about 1%. And then the NASDAQ really leading the downward momentum this morning, down about 1.5% after we got some calls on the street, or rather some rhetoric on the street that these market valuations that we're seeing could be a bit too high. And we do want to take a look at Nvidia and Palantir because we heard from Michael Burry overnight that he bought put options of both Nvidia and Palantir, equating to about 1 million Nvidia shares and 5 million shares of Palantir. So taking a look at that stock, we are opening in the red. It's down about 2% this morning. And this stock over the past month has seen some upward momentum ahead of that key earnings report in just a few weeks. So let's definitely keep a look on that. It's seeing some downward momentum as we move into today. Also want to take a look at Palantir because that is really seeing a loss this morning, down around 8%, despite that beat on both the top and bottom line yesterday afternoon during its earnings report. You can see that steep sell-off after we did get this announcement, or rather this filing from Michael Burry. That stock down around 8% this morning. We're also seeing a bit of a sell-off when it comes to Google, Amazon, Apple, Microsoft, Meta, as well as Tesla, all in the red this morning, with Micron and AMD as well as Intel seeing some of those major losses. And also crypto not having a good day either. We are seeing Bitcoin move below that 108,000 threshold, now hovering around 104,000, 103,700, but also seeing a sell-off across the board with Solana, Ethereum also in the red this morning. So once again, to take a step back, all three major indices in the red this morning to kick off today's trading session. Back to you, Brian.
All right, thanks so much, Brooke. Really appreciate it. All right, here are three things I'm tracking right out of the block today. Hot AI stories. Palantir said its third quarter revenue growth accelerated to 63% year over year compared to 48% last quarter. Company's guidance crushed it. If the stock is selling off on news that on fears that the valuation bubble is here. Maybe it is. Maybe it's not. Who knows? Cooking up the deals. The restaurant industry is ordering up some big deals. Starbucks agreed to sell a majority stake in its China business to Boyu Capital at a $4 billion enterprise value, or EV. Private equity is taking Denny's private in a $620 million deal, and Yum Brands said it's exploring strategic alternatives for long-struggling Pizza Hut. And I mean a long-struggling Pizza Hut. Crypto cracks. Bitcoin is down 20% from its October 6th record high of $126,500. Is the sell-off just beginning, or is a bottom taking shape? Here are my opening bid roundtable, host of Yahoo Finance's Trader Talk podcast and Slatestone Wealth Chief Market Strategist Kenny Polcari, alongside Yahoo Finance senior reporters Brooke DePalma and Nez Frey. Kenny, I know you're a big Pizza Hut guy, right? You love their sauce.
Oh yeah,
love their sauce.
Just where I'm going.
Look, we will put that. We'll get onto that deal activity in the restaurant sector in a second. But what we're seeing on Palantir, how concerned are you about it?
Listen, I'm not necessarily concerned because we've been talking about this for a while. Valuations have been stretched, and the longer the market kept going up, then the more stretched they became. Everyone's been talking about it. We all know it. This shouldn't really be a surprise. I'm just a little bit surprised that Palantir completely crushed it on every metric, and the first reaction was to sell it, right? As they now bring up all these, well, suddenly it's overvalued, and suddenly we have to take a break, and maybe it can't live up to the expectations and all that stuff. It's all, to me, it's all noise. While I think a pullback is healthy, I don't think this is the beginning of the end at all. I think the AI story and the Palantir story and, Nvidia and the rest of them is very much alive and well. And on any pullback, I would view it as an opportunity.
So you're looking at this Palantir pullback, Kenny, as an opportunity. Look, it makes sense. This company is crushing it. And let's put even trying to compare it to what the growth rates NVIDIA is seeing, I don't see a lot of companies putting out these Palantir type results. I mean, blew it out of the water fundamentally, blew it out of the water in terms of guidance. I like the conference call. I like Alex Karp. I mean, I like how fired up he is. I dig it all.
Yeah, on every metric, they blew it out of the water. But I just think that the market is finally sitting there scratching its head because, look, Brian, you've seen the divergence between the S&P and the equal weight S&P over the last couple of weeks where the S&P keeps getting dragged higher by tech, but the equal weight S&P now is suddenly starting to churn and move a little bit lower. So nobody should be surprised that we're suddenly seeing kind of the market take a breath again, which I think is very, very helpful. But on a day like today, I'm not necessarily going to jump into Palantir yet, because when you get news like this and a reaction like this, I always tend to let it settle down probably 2 days. I'm going to watch the action and see what happens, but I'm probably going to watch it for a couple of days because that's typically how my mind works. I let the news come out, I let the market digest it, and then I jump in.
Inez, I'll tell you how my day started real quick. I wake up very early this morning, had a cup of coffee, I go to our platform, and I see Wall Street CEOs worrying about a 10% or more pullback in stocks. I always hate when these Wall Street CEOs come out and say, hey, it's healthy if stocks pull back. Well, no, maybe not, because you're losing money.
No, but certainly, look, Wall Street has been talking about the potential of a bubble. This is what has been talked about over the last month, really, as you see these valuations going higher and higher. And you've had even strong reports like Palantir's report, for example, and you're still seeing a pullback in the stock. Uber as well had a strong report, but you're still seeing a pullback. So perhaps this is one of those sort of pause moments. We'll see if this follows through or if investors come in and buy the dip.
Inez, what, you're telling me that Palantir valued at about 213 times forward earnings? I mean, that's not cheap, right? I mean, that's not a cheap multiple.
It's not cheap, but I mean, if you take a look at their commercial business, it was up 121% year over year. I mean, in every segment, they just sort of blew it out of the water. And what's really interesting about the stock is that it's so supported by retail investors. More than like 45% of the stock from retail investors. And Alex Karp also talks to the retail investor, so to speak. I mean, even when he says he loves to turn on the TV and look at analysts saying why another company is better than his, it's because they didn't make money off of it. So certainly, look, this stock has had a massive run. It was up 175% year to date before the earnings release came out. And so perhaps this is some profit taking.
Brooke, you at the top of the show, you're looking at crypto. This crypto sell-off continues. I mean, that heat map was very interesting. And it's not just Bitcoin. I think Bitcoin now is down 20% from the highs. And we're seeing selling really across the board.
Yeah, taking a look at the heat map, the entire cryptocurrency heat map is in the red this morning. We have Bitcoin falling this morning, down nearly 4%. Ethereum also down nearly 6%. And also Solana down nearly 9%. And this comes after what we've seen, this tremendous run-up, especially of Bitcoin year to date. This the cryptocurrency is up about 9.5%. Investors really flocking to it during those key summer months when the market was hovering around record highs, as they were willing to take on a bit of risk here. And Ethereum had some of the best months that we saw in June through September. But now, as there's a bit of a fear, not just about this valuation, we also have the background of the government shutdown, the potential of the Fed not to cut interest rates yet again in December. And you could tell that now we're sort of moving away just ever so slightly from that risk-on environment that we were really seeing over the summer, with Bitcoin now moving closer to that 100,000 threshold when we were just above record highs of 120 last month, or September rather. And so it's been interesting to watch this sort of decline, especially over the last month, down about 15%.
Kenny, maybe we are going to get that healthy 10% pullback. I mean, look, Palantir is getting sold. Uber is getting sold on its stronger quarter. Crypto is getting sold. I mean, these have been some of the hottest assets in this market this year.
Right, and it makes sense. Honestly, you got a lot of trader types that are taking profits. I don't necessarily think the long-term investor is panicking. And remember, to your point, you're not losing money unless you make the sale, right? That's when you're either going to lock in a gain or a loss, right? When you say, it's down 10%, I'm losing money. You're not really losing money unless you make the sale and then you give up the upside. So I wouldn't necessarily worry about that, but I think it's definitely much more algo and trader driven than it is long-term investor driven. Like I said, for me, I'm going to look at it from the buy side as an opportunity.
So, Ken, you're buying these dips.
I would be buying the dip, right? But like I said, on a day like today in Palantir, when the market's focusing on everything negative, it's going to drag the whole place down. So I'm going to give it a day or two, see how it settles down, and then I'm going to go shopping in some of these names that got dislocated in price for no other reason than there was profit taking, not because the fundamental story changed, because so far it has not.
Inez, what I don't like about this, and let me get back to crypto real quick. I don't like this sell-off in crypto, given we've seen a lot of positive catalysts this year from the Trump administration, all things crypto. More are likely on the way. Theoretically, you even have a strategy out there, and Michael Saylor continuing to buy Bitcoin. So the catalysts are there. So to see this sell off and sell off pretty aggressively from the highs, to me, is a red flag.
It doesn't bode well for crypto, especially at this time of year when you're supposed to be seeing it going higher. There's a couple of reasons, though. I will go through them just very quickly. One of them is that you are seeing whales that are selling. That's putting pressure. So long-term holders are selling. You are also watching what's happening with the TGA, the Treasury General Account. It's basically like the checking account of the U.S. government. Because of the government shutdown, that has not been drawn on. And so therefore, there's concerns in the markets right now that there's not enough liquidity, and that is what tends to drive crypto higher, especially crypto. You need liquidity in that market, in order to do that. And because of that, it's stalling sort of that tailwind that you typically see. Compass Point did put out a note this morning saying that they see support around 95,000. So you could see a bit more selling unless there's some positive catalyst, or the government, once the government reopens, you are supposed to see a tailwind when it comes to this crypto market.
Good stuff, Inez. Brooke, I want to get to you on this Pizza Hut strategic review by owner Yum Brands. Now, Domino's market cap at about $13.2 billion. I didn't realize this, or I just lost track, full disclosure. Papa John's market cap at about $1.6 billion. I'm thinking Pizza Hut is somewhere valued in there if it were to find a buyer. But let's be clear. I mean, Pizza Hut has been struggling for 3-4 years. I mean, maybe it's the sauce. Maybe it's just the pizza. Maybe it's the cheese.
Brian, this is a business that has been struggling. Investors are really pleased by the interest of this company to sell. Just to give context there, we do have, I do have Domino's market cap up. It's about 13 above there. But what we're seeing here is the shares move higher when it comes to Yum Brands this morning. Pizza Hut, yet again, did see some declines during this past quarter. We did see Pizza Hut. It was the only one that saw same-store sales decline. It was about a 7% drop here in the U.S. That then led to about a 1% drop overall for Pizza Hut. And then you have those two other businesses within Yum Brands, about Taco Bell and KFC. Both those companies saw positive same-store sales growth. And this is something that under the hood of Yum Brands has clearly been struggling over the past few years, really. And now hearing that they're going to have a strategic review, that they're ultimately looking for a sale here to sell off that Pizza Hut segment of the business, is definitely being well received by investors here.
Kenny, better sauce, Domino's, Papa John's, or Pizza Hut? Hit me. Come on, you're our resident chef here.
Listen, as a nice Boston Italian kid, I don't go to any of them. I don't go to Domino's. I don't go to Pizza Hut, so you're asking the wrong person. I would only say it's probably the sauce and the dough.
Okay, fair enough. Inez, last word to you. I know you've mentioned McDonald's. You like those McDonald's fries. Which pizza you picking here?
I'd go for Pizza Hut, actually, but I mean, I get my pizza from Costco. They have these deep dish one that you can get.
Inez always hits me with these random surprises. I get my pizza. Costco's good, Inez. I mean, they're good.
It's awesome, and if you have a hungry family, definitely.
All right, well, we're not going to top it. We'll just leave it there. No pun intended, top it. Yeah, okay. All right, big thanks to my opening bid roundtable. Kenny Bulgari, Brooke DePalma, and Inez Ferre, shopping at Costco. All right, we're counting down to a big day here at Yahoo Finance. Our annual Invest event. It's going to be huge as Nvidia's earnings growth in the fourth quarter. On November 13th, starting at 8 a.m. Eastern, we've got a special full day of live global coverage of the key themes driving the market, AI, crypto, and much more, with the top people in corporate America you'll want to hear from. We'll be talking to Palantir co-founder and CEO Alex Karp, along with other big names ranging from Eric Trump to Lael Brainerd, and questions for our esteemed guests are now open and flowing in on the Yahoo Finance community channel. Love this new platform on Yahoo Finance. Don't miss Yahoo Finance Invest live all day on November 13th. Save the date and tell every single one of your friends. We'll be right back. Welcome back to Opening Bid. Citi jacking up its price target on AI darling CoreWeave to $192 from $164 today. New price target assumes almost 60% upside from current levels. Here's Citi's thesis on CoreWeave. It sees CoreWeave as one of the larger AI beneficiaries in the near term. With recent deals signed with Nvidia, Meta, and an OpenAI expansion, Citi estimates about 85% sequential backlog growth in the most recent quarter. Year-to-date, CoreWeave's stock is up a sizzling 223%. All right, quantum stocks have been on a tear this year. Can you blame investors? Seemingly every day, OpenAI is inking another big deal for compute power, reinforcing the view the future is ripe for opportunities in quantum computing. One company I've been watching closely all year long is Rigetti Computing. Shares are up over 150% year to date as the company approaches a key development milestone before next year. Spode Kulkarni is Rigetti Computing CEO and joins me in my Power Player segment. Spode, good to see you again. I last talked to you in January. You had a lot of new initiatives going on back then. Where are you at with the commercialization of your product? And good to see you.
Good to see you too, Brian, and thanks for having me on your show. We have had an exciting year. We met in January. Since then, several milestones we have accomplished along the way. Probably the most important one is launching our 36-qubit system comprising 4 chiplets of 9 qubit each. That we launched a couple months ago at a fidelity of 2-qubit gate fidelity of 99.5%. What that means is 99.5% of the times the computation we are doing is correct. That's an important milestone, not just for Rigetti, but for the whole industry, frankly, because our view is that chiplets are going to be needed to scale up quantum computing to hundreds and thousands of qubits. And enabling chiplets at a very high fidelity was a critical milestone for all of us to demonstrate. And we are proud that Rigetti was the first one to deploy a system with chiplets and demonstrating very high qubit gate fidelity.
What's the biggest challenge you're up against right now to bring your product to market?
So what we believe is that we are still roughly 3 to 5 years away from a critical milestone for the whole industry that we call quantum advantage. That's when really quantum computers are superior over classical computers for any practical applications in terms of performance or cost. That's really when data centers start buying quantum computers for practical workloads, if you will. So to get to that 3 to 5 year milestone, we believe we need to get to roughly 1,000 qubits or higher. We need to get to 99.9% 2-qubit gate fidelity. We also said we need faster than 50 nanosecond gate speed and some form of error correction. So all of us are trying to get to quantum advantage. That's really when quantum computing takes off in a commercial way. So the biggest challenge for us is the 2-qubit gate fidelity. As I said, right now we are at that 99.5% level. We need to get to 99.9%. Which means improvement in errors by a factor of 5 from where we are today, but also increasing qubit count from roughly the 36 and 84 qubit level that we are at right now to the 1,000 qubit level. Now, that's the area where we have made the big stride in demonstrating chiplets. With chiplets, we believe it's going to be a lot easier to scale up to 1,000 qubits. But the fidelity challenge continues. So that is our number one challenge, is to get the fidelity to 99.9%, along with the other metrics that we need to improve.
Elon Musk recently made some, I think it was a post on X, sounding a little bit skeptical on the future of quantum computing, but he's not alone. You know this, Subodh. I mean, there's a lot of quantum computing skeptics out there. What are they missing, and why do we need quantum computing in our lives over the next decade?
Well, I mean, those of us who have been in quantum computing for a while, we remind everyone that nature has demonstrated a perfect quantum computer to all of us, and that's the human brain. So it's not like quantum computers don't exist. They do. We all live with them. Our job is to get a machine, get close to it. Skeptics have been around and they will continue to be around. Honestly, of many years, 5 years or more ago, when I was part of the semiconductor industry, I was part of the skeptical crew too. Because intrinsically, it is a complex technology. This whole concept of superposition and entanglement is complicated to understand. It's hard to do something when you don't see it or cannot experience it. And quantum is one of those things. Anytime you try to measure something in quantum state, it goes to a natural state. So there's good reasons for skepticism, and that they will continue. Having said that, I mean, you look at the progress, and we have deployed several systems. Some of our peer companies have deployed several systems. So you can do your standard computing with quantum computers. You can already see that it's working. What we haven't demonstrated yet is to demonstrate that quantum computing is superior to conventional computing in terms of performance or cost. But quantum computers are around. They are doing the job that you expect them to do. We just need to demonstrate superiority in terms of performance or cost. That's what we call quantum advantage. So Skeptics will always be around, but we in the community feel very confident that we are making very rapid progress. And no other better indicator to look at than look at the values of quantum computing companies. I believe investors are beginning to understand that quantum computing is real. When you see several press releases coming not only from us, but other companies like IBM, Google, and many others, we definitely are getting closer and closer to quantum advantage. So I think skeptics are wrong, but they will continue.
Are you concerned about some of the AI valuations that are out there in the market? Palantir selling off, they had a bang-up quarter. But I look at what you're doing. You guys readily point out in your annual report, I mean, you don't have revenues yet, and you may not have them for a couple more years to any real substantial degree. I mean, yet your stock's up over 150% year to date. I mean, do you get concerned as a CEO of a company like this?
Well, intrinsically, you try not to look at stock price when you're making any important decisions. We try to stay focused on the technology and our roadmap and how we get to quantum advantage and beyond. Obviously, it's tempting as any human being to look at a stock ticker and move it up or down. But you try not to overreact to either movements in either direction, and try to keep a level-headed approach to what exactly the company needs to do. In our case, and in quantum computing in general, clearly the goal is to improve the technology, get to that quantum advantage, and then get to the eventual milestone, which we call fault-tolerant quantum computing. We're talking 3 to 5 years to quantum advantage. We're probably talking 7 to 9 years for fault-tolerant quantum computing. So we try to stay focused on the long term. Hopefully the stock continues to do well. We try to be as clear as possible with our investors that we are still, sales really don't matter. It's still all about technology development at this time. But people will react, and it is intrinsically, once you're a public company, it is tempting to look at the stock price. But we try not to react to that.
Subodh, real quick, do you have one big prediction for 2026 in terms of AI that may surprise people?
I believe there's some studies that are already coming out that suggest that quantum computing plus AI is a much more elegant, faster, better way to get to AGI. And as of right now, that still hasn't been digested by most investors. But I think 2026, if I can predict one big thing, it would be quantum computing plus AI will start really making inroads with hybrid systems that we are developing with partners like Nvidia and so on. So I think it will be exciting to see what quantum computing plus AI and how we can get to AGI that way.
Good to catch up with you again. Subodh Kulkarni, Rigetti Computing CEO. We'll talk to you soon. Appreciate it.
Thank you, Brian.
All right, coming up, Julian Hyman has you covered from Market Catalyst. Don't go anywhere.